Welcome back to Market Fatafat on ET now, and let's keep highlighting all the buzzers in trade right now. But before that, let me welcome Sneha Seth, who is joining us on the technical side. Very good afternoon, Sneha, and wishing you and your team a very happy new year. First up, let's talk about Federal Bank. That's the stock that you're tracking. Help us understand that what is the pattern that you are looking forward to, as well as what are the targets.
Good afternoon and Happy New Year to you and even the other panel members. Now, if you look at Federal Bank, this counter has been up nearly 2% today. If you look at the chart structure, this counter has been showing decent strength despite we have seen a recent correction in overall market and other PSU banks even. But here, overall banking space, wherein we have seen some correction, this counter has been quite strong. In fact, it has been trading above the 20 DEMA on the daily chart. As well as on the weekly chart also, if you see, it has been trading above the important moving averages. So looking at the overall chart structure, I believe this counter may soon surpass the recent highs which is made around 217, 216. That levels can be reached. So if someone wants to go ahead and long, I think from banking space, Federal Bank looks quite good.
Federal Bank looking good on the charts, Sneha. Let's move on then and talk about yet another auto stock that's been doing very well in today's trade, and that's Maruti Suzuki. The company has reported a 30% rise in the total wholesales at 1,78,000 units in December compared to 1,37,500 units in the same month a year ago. So quite the significant uptick coming in on a year-on-year basis, an uptick of 30%. Overall domestic sales, including that of light commercial vehicles and supplies to Toyota Kirloskar Motor, was also up 24.5%. This is what Maruti has said in the regulatory filing. The total domestic passenger vehicle sales were up 24.2%. Sales of mini cars comprising Alto and Espresso were higher at 7,418 units last month compared to just 2,500 units at the same time a year ago. Similarly, sales of compact cars such as Baleno, Celerio, Desire, Ignis, Swift and Wagoner were up to roughly 55,000 units compared to 45,741 units in December of 2023. So big uptick coming in on the sales front. Volumes are looking good, 30% uptick coming in total wholesale volumes, and looking very good for Maruti Suzuki. That stock is up roughly 5.5% as we speak. But ET now Sumit Chaturvedi also caught up with Partho Banerjee, the Senior Executive Officer Marketing and Sales at Maruti Suzuki, to talk about the outlook going ahead. Let's go across and listen into a snippet of that chat.
We did an all-time high record of doing a retail sales of 2,52,693 vehicles. And in fact, in this calendar year also, we did an all-time high record of retailing 17,90,000 vehicles. This has been the highest ever. Before that, in 2018, we did the numbers. Previous high record was in the 2018. Primary, I think all our models, starting from the premium hatch, entry hatch, MPV, SUV, van, all cylinders were fired actually in order to achieve this magical number. Our endeavor is always to offer our customers at a very competitive price, but nevertheless, due to different regulations which need to be implemented as per the law of the land, we try to, as much as possible, to absorb the prices, but after a certain stage, we need to pass it on to our consumers. So our finance team is examining it, and very soon we are going to announce the price increase for the models. And if you see in this calendar year, the growth was around 4 to 4.5%. So since we are coming on a high base, it is in line with what was the forecast which was done by the SIAM in the beginning of the year. So I think we should be going steady. In the month of January, starting from 17th onwards, in Delhi, we are going to exhibit our first electric vehicle. We are not only going to showcase the product, but we are going to showcase the overall ecosystem, because we feel just providing the product to the customer is not going to help us, but we need to provide him a complete solution. So be the ecosystem. So I would request the viewers, please come visit us, understand how we are going to change the landscape of the EV industry.
All right, then that's about Maruti Suzuki, as well as we also heard from the management. But moving on, then Gaurav, let's come to you and let's understand what's happening with retail and what is the news flow.
Well, yes, Railtel is in focus, and in fact, when we talk about stock performance, the stock is up almost more than 4%. And the reason being that the company has won yet another order. Now, this order is going to be worth more than 78 crore rupees. This order is from Bharat Coking Coal Limited, and within the scope of the order comes integrated IT-based security infrastructure along with various types of services is what the Railtel will be providing to Bharat Coking Coal. Now, when we talk about completion date, this order is expected to get completed before 28th August of 2025. And when we talk about the company itself, fundamentally we have seen this company winning multiple orders. In last month itself, the company has won more than 7 orders worth more than 100 crore rupees. And what makes it special is that when it comes to the completion date, because most of the orders are to be completed within 1 year, the turnaround time for the company becomes less, and that is the reason when we talk about stock performance also it is up more than 4%. So definitely watching out on this company on the back of the latest order win in this month.
Okay, watch out for Railtel. Frequent order wins coming in, and that stock is also doing pretty well. Sneha, coming to you, you've picked out Infosys for us on the charts. Tell us what the outlook is looking like for this IT company. Last 1 year, decent return, not too good, not too bad, but tell us what are the levels that you're spotting going ahead?
If you look at the chart structure for Infosys, this counter has been trading in a broad range. On the higher side, I believe 2000 is the immediate resistance zone. On the lower side, there is a support placed around 1780, 1790 odd zone. So this was the range, but looking at the strong move in today's session, precisely from the 89 EMA on the daily chart, I believe we may see an extension of this move at least towards 2000 and can head towards 2100, 150 even. So someone who's looking for a good bet in the IT space, this is the counter which can be focused. And someone who's holding for a long-term perspective, I think unless and until the counter is trading above 1820, 1850 zone, it's a good buying stock in any kind of a decline.
Alright, that's about Infosys. Smart 4% gain coming in on this particular stock. But moving on, Gaurav, once again coming back to you because there's the news flow regarding the sector that you track very closely. The banking space is in focus. Tell us the Q3 updates coming in from CSB as well as PNB.
Q3 updates have finally started to come from multiple banks, and first let's talk about CSB Bank and PNB Bank. So first let's focus on Punjab National Bank. We saw a sharp uptick in this counter after the results and rather the Q3 updates, because when we look at the updates, advances increased almost by 15% on a year-on-year basis, while domestic advances also increased almost by 14%. In terms of deposits also, there we saw an increase of around 15.6% on a year-on-year basis. And what's make it special is that when we talk about FY25 guidance, the company had guided that 11 to 12% growth is what we can see in terms of advances for the bank, and 9 to 10% growth is what we can see in terms of deposits. So bank is healthily above what they had guided earlier. And other than that, when we talk about CSB also, we saw a strong set of numbers. Total deposits grew almost by 22% and gross advances grew almost by 26% on a year-on-year basis. Specifically, when we talk about gold loan, that portfolio grew almost by 36% for the bank. Now it stands at around 13,000 crore rupees for the bank. And after that, when we look at the stock performance, both the banks are trading up more than 2%. So definitely watching out of these counters on the back of the healthy updates that have come for third quarter.
Okay, so banks looking good as of now, especially the select few ones because good numbers coming in. Let's talk about another bank that's going to be in focus, but it's on the back of brokerage notes coming in today, and that's Kotak Bank. Two notes coming in, one from Jefferies as well as you have one from Citi. When it comes to Jefferies, they have upgraded the stock to a buy rating from a hold and a target price of 2,120 rupees per share. And when it comes to Citi, then they've upgraded the stock to a buy rating with a target price of 2,070 rupees per share. Citi has initiated 90-day positive coverage watch on the stock as well, and they say that sustaining the company is sustaining loan growth momentum, and profit and loss has improved with some improvement in delinquency trends, and that is also expected to gather pace. Credit cost expectations are already set in higher, and they're also tweaking medium-term growth relatively with a relative low beta. So that's a note coming in on Kotak Mahindra Bank. Overall, looking bullish from both Jefferies and Citi, and the stock is up almost 2.5% rather as we speak.
Alright, good gains coming in on Kotak Mahindra Bank, but with this viewers, it's once again time to slip into a very short break. Don't go anywhere, we'll be right back. Welcome back to Market Fatafat. Let's keep it going with all the buzzers. And Sneha, coming to you for your next stock, and that's yet again another IT stock on your list, that is HCL Tech. Talk to us about the chart pattern as well as the targets.
see, overall, if you look at the chart structure, again, this counter has been doing quite good, continuously trading above 20 DEMA on the daily chart. Looks poised for a new record high. We have recently, if you see the chart structure, 1980 was the level which may act as an immediate resistance. But looking at today's overall this week's gain, what we have seen, I believe we may soon surpass this zone, and in fact we may see an up move at least towards 2000, 2050 in very short term. So in case of any declines, if someone wants to go ahead and long, can continue to add longs in this counter. The overall chart structure is very good. In fact, 2100 is the level which can be achieved in a month or so itself. So if someone wants to go ahead and long, can go ahead with this counter.
Okay, so long call coming in on HCL Tech, positive over there. Gaurav, a stock that's beaten down in today's trade is Petronet LNG. First up, you have a note coming in from Citi, 90-day negative catalyst watch. And just a few minutes ago, we've also had a clarification coming in from the company. Help us understand why such a reaction on the stock today.
Well, yes, Petronet is in focus and the stock was down almost 8% at a time at the lowest point of the day. But now after the clarification has come, the stock has recovered. It is still down more than 5%. But let's see what has happened. Basically, Citi has now opened 90-day negative catalyst watch. They have maintained their sell rating and a target price of 310 rupees. And the reason being that what they have said is that regulator PNGRB has specifically called out for the companies profiting immensely at the cost of gas customers. What they are saying is that the profiteering by annual escalation at the Dahej facility is something that they have highlighted, and they also have, Citi has said that the latest move clearly introduces a meaningful regulatory risk for the company. Other than that, now company has come up with a clarification. What they are saying is that the regulating LNG terminals do not form under the purview of PNGRB, and at the same time what they are saying is that the Dahej terminal offers competitive and one of the lowest rates in the industry so far. They have also said that such rates are fixed on the back of the agreement between Petronet LNG and various users and capacity holders, and after that we are seeing some kind of reaction once again in the stock. So definitely keeping an eye out on Petronet LNG on the back of the latest updates coming up in the company.
Really volatile moves coming in on petrol and LNG, but a key clarification coming in just a while back. We're moving on within the auto space. Let's also talk about Hyundai Motors. Yes, indeed, there has been the sales data, which was supportive. Just a 1% growth is what we have seen on a YOY basis. But apart from that, the company has announced today that they have gone ahead and actually revealed the much anticipated Hyundai Creta electric, and this company has already announced during the time of IPO that during Q4 of this fiscal year, where the company will be planning to get this into the markets. On your screen there are some visuals that are available. If we talk about the offerings here, then the company does say that it will be available in the two battery pack options. One is the long range and the other one is the short range, but the kilometer wise you will see 390 to 473 kilometers and on a single charge is what this car can actually provide. So that will be very interesting to see actually what kind of pricing the company does set, because Creta is one of those very successful models coming in from Hyundai, and Creta EV can definitely have the potential to disrupt the market. So on the back of this news flow, Hyundai is in focus today.
Okay, Hyundai in focus on the back of this new launch and looking good, in fact, on the stock as well. But let's shift focus and talk about a couple of counters from the cement space that are up in a buzz in today's trade. And you could say the cementing really strong gains today, and that's Ambuja and Ultratech on the back of an Investec note coming in. This is their cement channel check for the month of December, where they're saying that Pan-India prices have increased by 8.5 rupees per bag on a month-on-month basis in December, and pricing in December though is 8% lower year-on-year. The price hike announcements are in the range of 10 to 20 rupees per bag for January 25 in a few pockets, and dealers indicate demand trends improve but slightly on a month-on-month basis, but still continues to trend lower on a year-on-year basis. Dealers anticipate a revival in demand into Q4 of this year as this financial year FY25 as construction activity picks up post Makar Sankranti and aided by government spends to meet budgeted targets. The Rabi sowing is expected to do well with above normal rainfall, a positive for cement demand as well. For Ambuja Cements, they've maintained a buy rating with a target price of 950 rupees per share, and for Ultratech, they've maintained a buy target of 12,425 rupees. Ultratech currently going really strong in today's trade, also one of the Nifty 50 constituents that holding up the index very well. A 3% gain there and roughly a 2% gain on Ambuja Cements as well.
All right, that's about cement counters then. But moving on, Gaurav, let's talk about Muthoot Finance and tell us why is this stock in focus today?
Well, yes, Muthoot Finance is in focus because now Morgan Stanley, while maintained its equal weight rating, hiked the target price to 1825 rupees versus what it was at 1600 rupees. What they're saying is that the risk reward for the stock is actually now favorable, and apart from that, they have also raised their FY25 to FY27 EPS estimates almost by 1.6 to 3.8% for the stock, because when we look at AUM growth, they're expecting CAGR growth to remain at around 20% versus what it was, the expectation of 19% earlier. Other than that, they have also raised their FY25 to FY27 NIMS expectation to about 11.6%, and they have also reduced their cost to equity almost by 50 basis points to factor in the decline in the long-term government bond rates. On the back of this, what they are saying is that together with the earnings increase, this can drive around 14% growth in the stock price, and that is the reason why they are being bullish on the stock. And when we talk about the stock performance, also the stock is up more than 2.5%. So definitely watching out on this counter on the back of the positive note coming up from Morgan Stanley.
Stock that's in focus on the back of brokerage notes today is Muthoot Finance. Well, Sneha, coming to you, talk to us about Bata India, because last 6 months this stock is lower by roughly 5%. 1 year also the stock has given negative returns. Last 3 months, however, a roughly 4.5% uptick coming in on this stock. Tell us if the worst days for the stock, if you could call it that, are in the past on the charts, and if this is now looking like a turnaround story.
It very much looks like that if you look at the overall chart structure, we have seen that 1285 zone has been acting support. In fact, it is a multi-year support zone, and from there itself this counter has shown some buying interest today, and in fact recently in last couple of sessions we have seen some buying interest coming in, and the volumes are also good. I believe any move beyond the recent resistance zone, that is around 1460, 1465, that would be very interesting for this counter, and we may see a strong move coming up at least towards 1640, 1650 odd zone. So if someone wants to go ahead and long, I think the risk reward ratio is quite favorable at this point in time. With a strict stop loss of say around 1390, one can go long. First target would be around 1460. Once we see an up move beyond this, then can we hold to at least towards 1550 would be the second target, then 1650 would be the third target.
Alright, that's about Bata India. But Gaurav, talk to us about SBI Cards and tell us why is this stock in focus today?
Well, yes, SBI Cards is in focus, and once again Morgan Stanley has come up with a note on this counter. They have maintained equal rate rating and a target price of 685 rupees. What they have done is that they have actually cut the FY25 estimates almost by 4.7% to factor in the growth output that they are expecting, and also they have cut down the receivables growth. But at the same time, they are being bullish on the company. They believe that the company can achieve growth in FY26 and FY27. They have raised their FY25 credit cost assumptions almost to 10 basis point to around 8.65%. We already know that this company has been high on the credit cost. But lastly, what they are saying is that the higher NIMS assumption, specifically in FY26 and FY27, can actually help the company to grow their EPS in the next 2 years. Lastly, on the back of all these segments, they are being a little positive about the stock, and as a result, we are seeing uptick in this counter. So definitely watching out on this, watching out on SBI Cards also on the back of the positive note coming up from Morgan Stanley.
Okay, so brokerage note once again keeping a stock a buzz, and that's SBI Card today. Sneha, Sham Finance is the stock that you've picked out for us on the charts. Tell us what the stock is looking like. Last 6 months, single digit uptick coming in, with last 1 year, 50% return in the last 12 months itself. So tell us what's the outlook going ahead, and will this positive uptrend for the stock continue?
Today the counter is nearly up by 4.5%. If you look at the overall chart structure, we have seen historically this counter has been taking support near the 200-day simple moving average on the daily chart, and this time as well, after some consolidation around the 200-day simple moving average, this counter has shown decent strength. I believe it looks poised for an up move at least towards 3,000 to 70 to 50 odd zone. Once we see an up move beyond this, I think we may resume to the recent trends and the levels which we saw earlier, that is around 3,650, 3,700 levels would be possible. So I believe the risk reward ratio is quite favorable at this point in time. If someone wants to go ahead and long, can go ahead with a strict stop loss placed around 200 simple moving average, that is placed around 3,060. So 3,060 would be the the support, or the stop loss can be maintained around 2,870. That would be the stop loss. The first target would be 3,250, and once we see an up move beyond this, it looks poised for an up move at least towards 3,600 and above it.
Alright, that's about Sham Finance. But with this, we are completely timed out in this edition of Market Fatafat. Thank you so much, Sneha, as well as Dhwani earlier, for taking the time out and highlighting all the technical breakouts or breakdowns. But Gaurav as well, thank you so much for highlighting all the buzzers in trade. But with this, me and Snehi and the whole team who put this show together will also take your leave. Thank you so much for tuning in.
If you like this video, then like, share and subscribe to ET Now.